Everyone out here is stressing over Elon's latest tweet while I'm here just collecting rent on my capital. Selling puts on Tesla is the ultimate side hustle because you get paid the cash up front no matter what. It's like setting a trap for stock that you already want. Let me show you in this video how I'm milking the volatility on Tesla for easy cash. Let's jump right in. All right, let's check it out. Tesla, one of my all-time favorites. We always start by looking at the chart just to get an idea of where the stock's been going all year. But the fact is, we don't really care where it goes. I'm not trying to pick the top, I'm not trying to pick the bottom. I just want to make money trading the volatility on it. So I'm going to show you how easy this can be using the app that I just created. Now it has a couple of features. You can type the data in, but I like the easy way. So I'm going to go to the live data tab and I'm going to let the app do all the work. I'm just going to type Tesla in here and fetch the data. Now I'm going to choose the expiration date. Now keep in mind Tesla has 3 expirations every single week, Monday, Wednesday, Friday. So you can choose. For illustration purposes, I'm going to choose March 11th. Now I can also choose my risk level, conservative, mid-range, or aggressive. I'm going to show you conservative first. Now the application will automatically choose a strike price for me, and it also tells me where Tesla is trading right now. So right now Tesla is about $403.32 per share, and the application chose a $365 strike price. Now that's a 10 delta, meaning that there's approximately 10% likelihood Tesla is going to drop from 403 where it is now all the way down below $365 before the contract expires on March 11th. Not very likely. In fact, the application also shows me it's about a 9.5% drop, meaning that Tesla needs to drop almost 10% to be forced to buy the shares. But as I said a moment ago, Tesla is one of my favorite tickers, so I don't even mind buying the shares. Now this contract last traded at $198, meaning $198 gets dropped into our account right when we make the trade. Now keep in mind, you keep that no matter what happens. Whether Tesla goes up, goes down, or stays sideways, you keep the $198. Now the capital we need on this particular trade would be $36,500 if I'm putting up all the money, because it's a $365 strike and each contract always represents 100 shares. Now the application calculates the rate of return for me. So I'm making about 0.5% for this 7-day hold, annualizing my rate of return out to almost 20% per year if I did a similar trade like this every 7 days. Not bad. And you can use this application to check all different trades. Let's say you want to be a little bit more aggressive. Let's go to the mid-range option. Now the application automatically chooses the 24 delta for me, which has a strike price of $385. Now Tesla would need to drop almost 5% in order for this contract to go in the money, requiring me to purchase the shares. This contract last traded almost $500, $493, as we can see here. And again, the application calculates the percent return that we're making on our money for the 7-day hold, as well as the annualized return, a little bit over 46%. You can also adjust the strike prices. So for example, let's say I wanted to see what the outcome would be on a $380 strike. Well, basically I just click the button and the calculator recalculates all the figures for me. Now let's take a look at an aggressive trade. Because as I said a moment ago, I like Tesla and I'm totally okay buying those shares. If I had to buy them, I would turn right around, sell a covered call, and take an additional premium. So let's take a look and see how much money we can make in that type of a trade. I'm going to click on the aggressive button and I'm going to recalculate. Now the application will automatically pull up the midline delta, which is 39 in this case, a strike price of $397.50, meaning Tesla would have to drop from $403.32 to $397.50 in order to require us to buy those shares. Now this contract last traded at $813, meaning $813 would get dropped into our account right away. Again, we keep that no matter what happens. If Tesla stays the same or goes up, we don't buy the shares, we still keep the $813. If Tesla drops in price, we're committing to buy 100 shares at $397.50 and we still keep the $813. That would help us offset paying for the shares. This particular contract annualizes our rate of return over 73% per year. We can change the date anytime we wish. So let's say we want to change the date to March 4th and we're going to keep an aggressive contract and recalculate. Well, in this case, the strike price would be $400. So if it dips slightly from 403 down to 400, we're committing to buy 100 shares at $400. And this last traded at $380. So again, that money gets dropped into our account right away. So we can make any of these adjustments on the fly, and we can recalculate very simply to take a look and see what contract would best serve what we're looking to accomplish. Whether we want to stay in a trade short term, whether we want to stay in a trade a little bit longer, whether we want to go with a higher delta or a lower delta, the choice is up to you. This application makes it super simple. Do you guys see how easy it can be? Choose a stock you like. I love Tesla. Choose a price you're okay buying it. I showed you in the video how you can do that. Collect the cash. If the stock drops, no problem. You buy the shares of a stock that you already like. Then you turn right around and sell a covered call. Check that out in one of my next videos. Be sure you're subscribed so you don't miss out. And be sure to smash that like button if this content is helpful. Happy trading.